real quick intro to John. I know I said this in the beginning of the call, and we probably had people trickle in. John takes complex things and he makes it simple. Super simple. The first time I met him, I remember I wrote down a lot of things and I just like talking to the guy. He's a really personable guy. I've learned a lot from him and I'm really excited that he is on this call and we have him all to ourselves. And there's just a number of things, right? And really quick, with your life insurance license, who here grew up and said they wanted to be a life insurance agent?
Not me.
No one. No one, right? Everyone thinks I didn't know anything about life insurance. Everyone thinks life insurance is just death insurance. Your family dies and they get the money. But what's really freaking cool is that we have so many different ways to protect families. And John's going to touch on that in his journey of how he became an expert, quote unquote, at fixed index annuities and how long he's been in the industry. And I'm just going to let you rip. And if you guys have some questions, maybe we might be able to ask him some stuff. But if you, for the new people who are on here who might be intimidated by all these different products, I'm just going to let you go and how, how you found your journey here.
Awesome. I would love to maintain Dez's energy, but I would run out of gas in 3 minutes. So I'm going to bring it down about 6 notches and go at my own speed here. Hopefully, it doesn't bore you guys to death, though. I do want to touch on something that you guys were hitting on. I think is really important and talking about getting to these events. And um, they're so invaluable. I know a lot of people are like brand new, and I know even more of you are new-ish. The reason why we're doing this all virtually is because of COVID. We did everything face to face before. We did face to face sales, we did face to face meetings, we got together for quarterly meetings all the time face to face because this is a people business. It's not meant to be in solitude and not talk to anybody else. So the people that I networked with early on, that when we got around each other, whether it was the quarterly meetings, the big meetings, whatever it was, those people that I networked there and got to see face to face, we're all integrity partners together. And so it's a great way to you learn so much. You don't know what you're going to learn until you actually get there. You network with people, you build a bond that you can't build through a screen. You can see each other every single day through a screen. But there's something different about meeting someone in person. That's how you really get to know people. And so I think those events are invaluable. It's really important. If there's any way you can get there, you sell one policy, even if you have to fly from the furthest point in the United States, it pays for itself right there. So, and you're going to get the knowledge and wisdom and experience there to make that money back tenfold. So I would really highly recommend getting there any way you can. And when Des says you don't need $50,000 to start this business, I started this business with negative 1,700. And if that doesn't make sense in your brain, it shouldn't. Because when I got into the business, my bank account was $1,700 overdrawn. So I needed to make $1,701 just to have a green bank account. And like you said, my name's John Gavin. I've been in the business for about 13 years now. I've been with FFL from day one. I was one of the original agents here. That does not make me special in any way. I came here at a necessity. When she asked about, who here wanted to grow up to be an insurance man, it certainly wasn't me. My dad was a golfer. He golfed with the same three guys, went on a trip every year. And the one guy that lived in a big house, drove a nice car, and paid for the whole trip was in insurance. And I couldn't care less what he did because he wore khaki pants and ugly sweaters. And I thought that's what insurance dudes were, and I never wanted to be one. So, like I said, I came into this business out of necessity because of some other stuff that didn't work out so much for me. And and so I found this. Can you get her out of here real quick, please? I have a loud puppy that just walked in and she's not going to be quiet for very long. So anyway, so I found this out of necessity, not because I wanted to, and it's interesting that the first insurance company I went to work with was a captive agency, which they have brick and mortar. You go in, you sell their products, and that's it. And I remember seeing on the door it said insurance and financial services. And I was almost embarrassed because I was like, financial services, you sell insurance, you insure cars and houses, and you sell some life insurance. I didn't know what that financial services part was. And I knew that they had a little bank that they had, and had some other products, but we never talked about those. I think it's just because it was a captive agency that they had to have that on their door, but it's not even something we talked about. So, the working for a captive agency didn't work out for me. I went to the broker side. Somebody asked me the opportunity about a previous company, lasted there a short period of time. When Sean started the FFL up, I was one of the first people to jump over here and come in. In the first, I had two small kids. I had no money whatsoever because working for a captive agency is no way to make any money. In my first 45 days with Family First Life, I had about $17,000 deposited in my account, and that's what changed everything for me. And it's because of the high comp that we have here and no fees or no costs other than your leads, it's the best company and the best business become instantly profitable. um, Early on, we were trying to build the business. So we didn't have any leads you have now. We didn't have a CRM. We only had one carrier. So it was a little bit, the company was built and to put the agents first, but it was still a little bit rocky early on. And I was at a meeting and I saw this guy get all excited next to me. And I asked him what he's excited about. And he said he just had an annuity issue. And he showed me he got paid $62,000 for it. And I was like, what the hell? And from that point on, I'm like, okay, so we're licensed to do this. It's a product that we can do. Nobody's ever talked about it before. But I made it a point to learn all about these products because if you have your life insurance license, you can sell fixed index annuities. And that's what he closed. It was a big one, but he closed it, got paid 62 grand. And I knew that that would change my life. So I made it a point to go to every training I could possibly think of, read online everything I could, just absorb everything I could about these fixed index annuities, and I tried to uncover money everywhere I could. And I was uncovering the money, and I was getting the illustrations put together, and I was going out and presenting to people. But I didn't by relaying this information to the clients, I was overwhelming them. It was a product that they didn't understand. It was a product that I didn't understand wholly. I just knew a bunch of words, and this illustration had 25 pages. And for my first 9 appointments, I went over these illustrations, and they said, "Thank you for your time," and I never heard from them again. And so again, I saw other people closing annuities, and I thought that there's got to be a better way because they're no smarter than me, and they're closing these things, and they're all different sizes, and I was just failing miserably, and it's because my approach was so off. I was trying to help clients with annuities. It's not a matter of showing them how much you know. It's understanding what their concerns are, showing them a product that addresses those concerns, understanding what their goals are, showing them a product that addresses those goals, and it sells itself. And so, Des was saying I have a way of taking a complicated product and making it really simple. Well, in all honesty, these aren't complicated products. They're really not. And the reason I'm going to go into the reason why you should want to sell these because they can change not just your business but your life. They're the most profitable product that we have. The average commission is about, I believe, it's about I've heard 78 to 8,200. The chargeback rate is less than 1%. It might even be a tenth of a percent. So when you get paid, you get to keep it for good. And the physical time that it takes to close these is about the physical time. Now, Alicia is going to say, "Wait a minute, no, I'm just joking. We can't get the funds transferred. It's the bank, but that'll get done. The physical time it takes on these is the average of about 35 minutes. So how many of you would put in 35 minutes to get paid 8 grand that you actually get to keep and don't have to worry about chargebacks? So the reason why these products are so strong is because they hit the trifecta. They're great for the clients, they're great for the agents, and they're great for the company. And so why are they good for why I'll get to the agents in a second. That's where the money is, but you got to listen to this first, okay? So why are they so good for the clients? So if you think of who our target audience is, okay, don't think of just everybody out there. Think of who our target audience is. And again, you might be 19 years old, you might be 18 years old, you might be 20 years old. You can actually close these. I help people all day long that are 19, 20, 21. Your age does not matter. But who is our target audience? It's people in their 50s, it's people in their 60s, and it's people in their 70s. It's not people in their 20s, 30s, and 40s. These are retirement products. These are conservative products. So if you think of who our target audience is, they're people in their 50s, 60s, and 70s. It's people who have at least have retirement in the back of their mind, or in their sights, or they're thinking about it, or they're talking about it, or it's people who are retiring now, or it's people who are retired. And there's literally trillions of dollars of with people out there that we can actually help. And why is this product so good for our clients is because there's nothing else out there like it. There's just not. We don't have any competition. because we have a product that is so unique. Financial advisors do not have them. Banks do not have them. Their nephew doesn't have them unless they have their insurance license. Nobody else has this product except for us. And what makes it so unique? First and foremost, they don't lose any value. They don't lose any money at all. So if you've been paying attention to the stock market and the stock market, if you guys aren't familiar, if you don't never invested a dime, that's fine. Our economy is basically built off the stock market and the trading of the stock market, mutual funds, that sort of thing. So so if you've been paying attention to the stock market, it dropped pretty significantly. It bounced back for the most part, not quite there yet. Um, None of our clients lost any money when it did. None of our clients lost any money in 2021 and 2022 when the market's lost, I think it was 22%. None of our clients, if they had our products back in 2008, when we had that last big correction that the market lost 49% and took 6.5 years to get back, none of our clients would have lost any money then. And so why is that so important? So when you're 20, 30, 40 years old and you're working, you've got a 401k. And for those of you who aren't familiar with the terminology, the 401k is a retirement account that when you're working, you put part of your money into the 401k, the company has a match, and it grows over time, right? But when you're 20, 30, and 40, and you're contributing to your 401k, if the market crashes, you check your statement or check online and you lost money. It's like, oh shit, I lost money. Sucks. Stinks, whatever. It doesn't impact you financially because you're not using that money at that time. It just stinks to lose half the value. And if you've never been through a loss or a correction like that, you might be nervous. Oh my God, I just lost half my money. Da, da, da. If you've been through it before, you know it eventually comes back. But it sometimes it can take some time. So when you're younger and you're contributing to your 401k and it loses value, it doesn't really impact you financially because you're not using it. But now let's fast forward to people in our target audience groups, people who are in their 50s, 60s, and 70s, people who are mapping out their retirement. So when you're mapping out your retirement, you're getting all these different things ready to go. You're trying to figure out what's going to be your permanent income. Do you have any pensions? Are you going to claim Social Security at some point? What do you have for assets? What do you have in your retirement account? So people start their plan. They look at what their fixed bills are, the house payments, this. We need this to survive off of. We want this extra money for a vacation. We got this money for the car payments or whatever it might be, maybe a motorhome. They gauge their retirement based off of what their value is, other retirement accounts at their highest point. They'll look and say, okay, we've got $400,000 in this account and we're going to have this for permanent income. We got this for a pension. We can draw this down at this amount of rate and it's going to last us forever, right? But what happens when that 400,000 takes a hit? What if it goes down to 350? What if it goes down to 320? Now these people that are maybe they've planned their retirement and they're like, oh no, we can't retire now because now we only have 320,000. You've got to work 2 more years. You've got to work 2 more years. We got to start saving more money because we just lost all this money. Now, will it come back? Yes, over time. But the last big one took 6.5 years. So if you're within 6.5 years of retirement, now you're going, okay, how much longer do we have to work for? How much more money do we have to put away? Because we don't have the money we had before. If you want to make things just a little bit worse, take the people who have retired and they have this amount of money put away and they know what their bills are. And now they're looking, okay, so we have this amount of money to last us a lifetime and we don't have any income because you know what your biggest asset, your biggest financial asset in this world is? It's your earning power. When you retire, you eliminate your biggest asset that you have, and that's your earning power. So when these people are not working anymore and they have what they have, and this gets diminished, then they start getting nervous. Then what do we have to? Then we have to change our quality of life. Then what are we going to cut off? Maybe we sell the motorhome. Maybe we don't go on these vacations. Maybe you go back to work. Maybe I go back to work. And they start making these massive life adjustments because they left their money in the market and the markets are volatile and the market went down and they lost money. So our product eliminates all of that. Our product allows somebody who's a couple years away from retirement to plan off their retirement account at its highest point because it's not going to go below that. It allows people who are retired to figure out how much they can spend because that money is not going to go below where it is right now. So it gives those people a peace of mind. And so
Right.
it allows you to utilize the account at its maximum. So we have the 100% protection against market loss. So it's not just built, like these products have really evolved. They've been around forever. They've really evolved over the last 10 years and more specifically in the last 3 to 4. Because even though they're built off that foundation of safety and they're never going to lose any money, the insurance companies have changed the way that the interest accumulates on them. And so now that the interest accumulates, they're not just for people who are ultra conservative. The interest rates can accumulate at a pretty high rate. And we're looking at right now, we're illustrating between 7 and 8% on safe money. And so if you think of all the retirement strategists that say, oh, you can withdraw 4 to 5% safely out of your retirement account and never outlive your money. Well, if you're gaining 7, 8% and you're withdrawing 4 to 5, not only are you not going to outlive your money, but your principal balance is going to grow over time, even as you're taking these withdrawals. So we've
Right.
got these products are built off a foundation of safety of never losing money. They get a pretty fair return based off the way the interest does accumulate. I never used to talk about this side of things because this to me seemed gimmicky. And when people call me up and use this as what their selling point is, I try and redirect them because this next topic is not going to be a selling point. It's just a feature. But these products do come with rollover bonuses. Okay. So I used to not bring up the bonus until the very end. Oh, by the way, they're going to add this amount to your account because I always thought when you're talking about retirement and you're talking about a financial tool, that talking about a bonus was gimmicky, you know, but they're so huge now you can't not talk about it. We've got bonus of 15, 18, 20%. And so what I utilize that for is to talk to people and say, okay, so not only do we protect your money, not only do you get a fair return over time, but we also have these rollover bonuses going to add, whatever the bonus is on that product. Say it's 18% to your account to give you a jump start from where you're currently at right now. So even if the market's, you lost a little bit in the market over the last 6 weeks, if you roll your funds over now, we can recover some of those losses and even add to your account and give you this massive jump start from where you're currently at right now. And the fourth feature it has is these products have no fees. Most of them have no fees. Some of them have small charges, typically less than 1%, but you're getting some sort of feature in regards to that. You're getting something for a charge. There are no actual fees like a broker fee. A broker fee is you just pay the broker to have your account there. That's a fee. You're not getting anything for that. We don't have any fees. We have some rider charges to add some bells and whistles to these, but we have no fees. And so when you're talking to our target audience, the 50s, 60s, and 70 years old, people who are thinking about retirement, people who are retired, and you tell them you have something that's going to eliminate all the anxiety, all the volatility, all the market loss from their account, we're going to give you a fair return over time, averaging 7 to 8%. We're going to charge you less. We're going to charge no fees, and most times we have less charges than you pay your typical broker. And we're going to give you a bonus of anywhere, they range from 11 to 20%, on top of that. So when I do my illustrations, when I go over this with people and I ask them, I go through all of that, like, what else are you trying to get out of your retirement? Because what I learned and what really helped my closing ratio was understanding that this target group is only afraid of a few things. They don't want to lose money. They definitely don't want to outlive their money. Some of them want to leave a legacy to people behind, and they don't want to get jacked by fees. You can ask 1,000 people, and you're going to come into some people that are just crazy and say some weird stuff. But for the most part, 99.9% are going to say those things right there. And so if you understand that those are their concerns, you find out what their goals are, like how much do you need to withdraw? Are you really healthy? Do you have a spouse? Because like I was telling Des the other day, when you have a married couple that's 62 years old, there's a 25% chance that one of them's going to live to 90. So now how long do you have to make your money last? So we have products that have lifetime income that's going to pay them as long as they're alive. And we're the only product that has that. And so if you understand, I'm going to just go into this a little bit, and I'm going to go into the dollar amount because I know it's important to everybody because these are incredibly profitable and probably the only reason that I stayed in the business and I was able to get a deal with integrity. Um,
Yeah.
but these products are so unique. And if you think of, the 401k and the IRAs, if you're not familiar with those terms, when you work with a company and you're putting away money for your retirement, that's typically a 401k. There's some other acronyms for different types of careers. But if you're putting away for that, when you end your career and you go into retirement, you have so much time before you have to take your money out of there. And so you usually just kind of like looking around, what does everybody do? They go by what they know. They find a broker somewhere and say, what would you do with this? And the broker's going to do something with it, and they're going to do, work on their best interest, and they're going to take the tools that they have in their tool belt, and they're going to diversify their portfolio based off of their age and their risk tolerance. So what they're going to do is they're going to take the older they are, say they're 65 years old. A lot of times they use the rule of 100. So if you're 65, you're less tolerant to risk. So let's put 65% of your money in something safe. Well, in their world, it's safer, but when it's safer, it doesn't grow much either. So when you don't have a too much of an ability to lose funds, you also don't have the ability to gain much either, but it's safe. Now we put 35% over here on the equity side. And the equity side has that ability to grow, but it also has that same ability to lose. And so what they're trying to do is to limit the risk on this side, but still have the ability to grow on this side. Well, we do all that in one product, but we don't have to do 65% safe and 35% have the ability to grow. We have 100% safety because our products don't lose any money at all, and 100% of it grows when the market increases. And so we have something they're trying to do the best they can. They just don't have the tools to do it because the 401k and the IRAs were never intended. When they designed these products, they were never designed to be the end all in retirement. Most companies, many before most of you were born, provided pensions, which are going to be lifetime payout. When you retired for so many years you were there, you get paid X amount. So you had a pension that's going to pay you as long as you live. And that was the foundation of what the retirements were. The 401k and the IRAs were built to supplement that. But then people started living longer and the company started losing out and they're like, okay, we can't have these pensions anymore. We're going to do away with them. So 95% of the people that or companies that provided pensions in the 80s no longer provide them. So then we have something that was never designed to be the standoff because you shouldn't bank 100% of your retirement on something that could lose 10, 20, 30, 40% a week before you walk out the door, or a month before you walk out the door. So that's where we come in. We can provide that pension in the form of an annuity with a lifetime income. We can provide the safety and the ability to grow in one of our growth annuities. And so,
Right.
so we have something that's so unique that advisors don't have it. And when I go through my presentations, the number one comment I get is, why isn't everybody doing this? And it's just because not enough people know about it. Not enough people know these exist. And so
Right.
that's where we come in because we do, as a group, we do a total job of promoting these. And so we just need more people out there trying to uncover the funds just by asking one question. You know, you guys are talking to people all day long about, fund expense, IULs, mortgage protection. If you were just to add one or two questions at the end of your script, find some money and then ask for help, then you can help out so many more people. There's a few people on here that I've been working with right now. And a lot of them came to me with no knowledge or experience at all. And now they understand that this whole process is simple. Now, does it take a few times to get the whole process and system down? Yeah. I mean,
Yeah.
as a whole, we have retirement products that increase when the market increases. They don't lose when the market loses. Little or no fees and a bonus attached. That's
Right.
it in
And I
a
was going to
nutshell.
say something too, real quick, John, because if you guys remember in the beginning of this call, he said he was 0 for 9. He was 0 for 9. He had to learn failing forward. But what's really cool about Family First Life is we have a system where you guys are doing all your daily normal income producing activities. You're buying final expense leads, you're buying IUL leads, you're calling your client. You don't have to know nearly as much as John knows. He's just been here a long time, so he knows all the the lingo, what product, what a bonus is, all that stuff. When you guys do your client inventory, and you ask that question, you do a very thorough job, and you ask that golden question, write that down, golden question, and you uncover that somebody has money laying around and they don't want to lose anything in the market because they're reaching that retirement age. And the golden question is, hey, John, do you have anything that acts like life insurance that's going to transfer over to a loved one, insert beneficiary's name, the moment you pass away? Anything like a 401k, IRA, stocks, bonds, mutual funds, significant savings, I don't know, money under the mattress, anything like that that's going to go over to your wife, your kids, whoever their beneficiary is. And then they might say something because here's the thing, most of everyone in America, if they have a normal corporate job and they're working full time, they are paying into a retirement account, right? So some of us are, they may be younger. And I remember when I worked at my first full-time job, they said, hey, you want a 401k? I'm like, I don't know what the hell that is. And I didn't think about it. But most people are paying into a 401k for a very long time. And the thing about a 401k or an IRA or 403b or a TSP, all those other like retirement accounts, they go up and down with the market. So if everybody who's on here, please put a 1 in the chat if you've never like written an annuity and you're still trying to figure out what the heck it is. Lots of people. All you guys need to know is that you're going to do your normal daily activities. You're going to call your leads. You need to do a really good job with the client inventory. And we call it finding the money, right? So write down client inventory, find the money. Okay. And you ask that golden question and you're like, okay, John says, yeah, I mean, I have like 100,000 in my, or okay, let's say this is what literally realistically, this is what happens when a client says, yeah, I have a 401k. Then you as the agent, you say, Great, John. Is this with your current employer? Is this from a previous employer? Like, where's that money from? And then John says, well, I mean, I left this other job and it's kind of sitting there. And I'm like, okay, awesome. So it's not with your current employer. Is your money like managed? I might ask a little bit about it. And then you kind of just write that down and you move on. Please just sell your normal policy, help that client that you're helping. Do not try and jump to an FIA. Just take a really good note of it. Cool, 100,000, not with current employer, right? Do a good job, finish your appointment. Then you're going to circle back, and then what would happen is you're going to tee up the question. Some people ask this question, hey, John, I know I helped you with the IUL, or hey, I helped you with the final expense for Mary and blah, blah, blah. Now, I noticed you had 100,000 like sitting in that account, and I know it's not really being managed. Like, how much of that 100,000 are you willing to lose? I heard that from a freaking I think I heard that from John himself on the SRS call, right?
Yeah.
So you write that in there and then you tee up an appointment. You'd say, hey, if I could show you a way to eliminate like all market loss, eliminate the fees, and then still be able to earn interest, is that something you would find value in? I don't have time to do this right now, but I could set up a call with a specialist. Yeah, well, I'd love to. Boom. And then you go and you hit ask a specialist on the gateway and you go to the bottom left and your manager should show you how to do that. And we talk about that all the time on the SRS call. And then boom, you link up with John. He sets an appointment. He goes through everything. You take a couple notes, and then you are going to be able to take the training wheels off and to learn from there. But John, does this cost money for a client to protect their money in an FIA?
No, it doesn't. It doesn't cost them anything at all, and that's why I don't call it a sale because if we're rolling over quite a bit right now, and of all the people that we're rolling over, we're doing growth annuities where there's these bonuses that are attached to them, and they're leaving. I mean, on day one, they have more money than what they came with. So how is it a sale if it doesn't cost them anything and they actually have more money? They're not buying anything. They're rolling their money into it. They're protecting it. It doesn't cost them anything at all.
That's
Yeah,
huge.
and that's the way you said that is actually perfect. And if you guys can, yeah, hopefully you guys were paying attention. And I know that she went through it fast because that's what she does, but that was
My
the
bad.
way she worded that was absolutely perfect. All you're trying to do is do your financial inventory, ask the golden question. I always ask what types or what life insurance they have in place right now. Great. What else do you have that would act like life insurance that would be transferable upon your death? And then just exactly like that. In regards to this, how much more of this can you afford to lose? The market needs to go down. Great. I don't have any time right now, but I can have a specialist reach out to you, set an appointment. It takes about 10 to 15 minutes to show you how to eliminate all the risk and all the fees from your current account. And then just move on. You don't have to get into a conversation. You don't need to know anything about that in order for that to happen. And I'll tell you right now that to get into the financial part of it, if you were to ask, if everybody here was to ask that question in every single appointment, I don't know that you would not close at least one a month. You'd probably average a net income about 8,000 or $100,000 a year more, and you're bound to find some bigger ones too. There's a guy that I helped in November close his first one, and his first commission check was about 15,000. And we're closing. We're waiting for the funds transfer now, and everything's been signed. It should be in a couple weeks, but his commission is going to be just under 80,000 on his second one, and he still doesn't know anything about it. I mean, he has an understanding of how they work, but he doesn't want to do the presentations on his own. I do them all for him. And so you guys have so much help. Ask a specialist. There's a lot of really good people on here that can help you. And my goal is to train some of the people I'm working with now so they get up to speed so they can turn around and help everybody else and like duplicate the system that we have here because it
Right.
is the most profitable product that we have available to us. You guys are talking to clients every single day that could use your help. All we need you to do is step out of your comfort zone, start asking this question, the golden question, because it might be uncomfortable the first time you ask it, but anything that is uncomfortable the first time becomes comfortable, then it becomes habit. And once it becomes habit, that's when you'll start seeing your bank accounts change. That's when you'll start seeing the volume of annuities of people you're helping with, and you'll start seeing those massive deposits get in there and it allows you to. And the third thing I want to touch on, it's good for the clients. We discussed that. It's great for the agents because the income is astronomical. I've written about 40 million and I've spent $0 on leads. I've all used current client statements or not current client statements, current clients that I've been talking to. Sometimes people I didn't even sell to. I said, oh, by the way, I know life insurance didn't work out for us, but what about, and then I go into setting an appointment for the annuity. So 40 million and no lead cost whatsoever. So obviously it's really good for the agents. And why is it good for the agency? For those of you that are building an agency right now, I've been around for a little bit. You know who's never rolled me debt? People, agents that write annuities. You know who hasn't left yet? No turnover. Agents that write annuities. You know who's able to build the biggest agencies within mine? Those who wrote annuities, because they have these, it's like having a financial backer with deep pockets that you can just reach into, whether you want to open up an office, hire staff, buy your agents leads. It helps you pour back into the business and let that business grow. And so that's why these products are so good for the clients, great for the agents, and great for the company because it's such sticky business. It's the most profitable product we have out there, but it's also most misunderstood. And if you just understand that you don't have to know everything there is to know about these products to at least set an appointment. They're retirement products that have no volatility. They don't lose any value at all. They have little or no fees involved. They have these giant bonuses that get attached to them, and they get a really fair return over time. The clients are begging to find something like this out there right now. They just don't know it exists. So we need more of you to become uncomfortable, start asking that question, start uncovering the funds, and wait till you see the client's reaction when they see this. That's going to fuel the fire within you because you're nervous because you don't know if you have this product that they're going to like. When you see their reaction, how glad they are to get their money out of the market because they did not know there was another option, you're going to feel so much better about this, and it's going to just fuel the fire and help you go find more.
That's freaking huge. Mic drop. Put a JG in the chat. I know we're reaching the end of this call. And John, I forget the statistic. Maybe you know of it. But like what we do truly helps the client. Again, it's not a sale. He said that because they don't know what they don't know. Some people work their face off and they might have 500,000 in a 401k and they're trying to retire in the next year. And if they're so scared that the market might drop and now they might have to be forced to work. Who here has seen an older person working at Walmart, maybe in their 60s or 70s, put a freaking W in the chat. I've seen a lot. People are forced to go back to work because they didn't plan or prepare well enough or they lost 20% of their retirement in the last month or the last year. And we have a product that could freaking help them. And a lot of times, too, if you look at this and you're like, hey, if that's my grandma, that's my mom, that's my aunt, I want to do everything possible to make sure that I can educate them and put them in the right position. And we have specialists for that. And you guys, all you have to do, every agent on this call, commit to asking the golden question. If you ask the golden question, you don't understand it, read it, understand it, hop on the SRS call. I promise you, compounding every call that you're on, you're going to learn something new. I've learned a lot from John. Thank you, John. If there's one piece of advice that you want to give to all these new agents who are trying to understand retirement or maybe a book that you want to suggest, or I mean, honestly, it might just be the SRS call, whatever you want to give these guys as the last piece of information to inspire them to take action. They don't have to know everything. They just got to get after what they're doing already.
Sure. So to keep it as simple as possible, I know there's a majority of this is a younger group. So if look into your parents, look into your grandparents, see if you can have a conversation with them about their retirement account, if they're open enough to discuss that with you or somebody else you know, because I can't tell you how many people have, including myself, have helped their parents with annuities and protecting their retirement. And so there's no softer landing spot than to help your parent, your grandparent see an illustration, see a presentation, see all that gone through, and seeing their reaction because they've never seen anything like this, and that'll give you the confidence to go ask that question to clients. But if you can start with your family or somebody else that you know that looks like me, I'm our target audience. Okay, so if you know anybody that looks like me or older, a little bit older, feel free to reach out to them, see if you can discuss their retirement because we do have something that's really special and really unique.
Wow. Thank you again. Thank you so much, John. Guys,
Yeah.
I know you took a lot of notes. Let's take action. I know it's 6 o'clock Pacific Standard. Let's get back on dials. Let's freaking get after it. I'm excited to see every single one of you at Ignite. When you see John there, I mean, you could give him a hug or a high five or whatever you want and just, thank him and just commit to getting better. So thanks, everybody. Have a great night. Let's bring that momentum for the rest of the week. See you guys later.